So this question here is the 2012 mock question for company accounts Dawn Limited. Again, I'm going to go through a couple of notes because we've seen a lot of these quite a bit, so I'm just going to focus on some of the ones we haven't seen as much. First one is the damaged stock. We've seen every question. We've also seen the patents for investment income every question. We have seen this quite a bit as well. In this form, it's in every question as well. The disposal one included as purchase trading stock. The suspense one with debenture interest, and again you can notice a trend. All of these are the exact same question across, or exact same adjustments across every question. Discount received, I'll just look at this because it generally catches people out a little bit more. Discount received 320 entered only into the creditor's account, therefore obviously it's missing from the discount account. The discount figure shown here, I find it, discount figure shown here is 12,400 on the credit side, so that's income. So credit side figure there, if we look at this, this is discount received, which again is a form of income. Another credit side, so you're going to add the 320. So we can see it down here for our discount account. I'm adding the 320 because it's an addition to the already balance for discount received that we already have, because they're both income figures. Excuse me. Note 5, sorry, is, again, we've seen this note just in the last one. This is about a storeroom being damaged. We're replacing it by building a new one, charging it as a business expense, and we're looking at compensation. First thing to look at is to look at what's been damaged, the value of what's been damaged. 32,000 store, 18,000 stock. So 50,000 euros of fixed assets were destroyed, or of assets were destroyed. And along with that, then we received 50,000 of compensation. So we actually haven't made any loss by fire. Showing this straight away here, I have my, well, I showed it down here actually this time. I have 50,000, which was the cost of what was destroyed. Compensation 50,000, which means there was no loss and damaged buildings, but this 50,000 still has to go in as a current asset. Okay, so I've done that. Next thing I'm looking at now is I'm going to add I'm going to take away what was damaged from the books, because obviously it's completely destroyed. The storeroom worth 32,000 was destroyed, therefore I need to reduce buildings by 32,000 because that 32,000 is gone. Stock during the year was destroyed, so that has to come out of purchases. So my purchases down here, I'm going to take out the 18,000. This first thing here was to do with note 4 or note 3, and this now is what I'm doing here. I'm taking out the 18,000. Next thing I need to look at is they have built a new store. Cost 22,000 was treated as a business expense for the labor. So that was treated as salaries. It shouldn't have been. This should only be looked at for buildings. So I need to take that 22,000 out of salaries like so. And the other 38,000 was treated as a business expense for purchases. It's for stock. It shouldn't have anything to do with that, so I'm going to take that out of purchases. Where does this 38,000 and 22,000 go? Well, it was involved with purchasing or building a new storeroom, so it's going to be added to buildings because we're increasing the value of buildings. 22,000, 38,000 adding to buildings. Therefore, my buildings balance is now 788,000. My salaries drops to 202,900. I have 50,000 going in as a current asset there, and down here my purchases drops to 1,053,000. Second time we've seen that note phrased in the exact same way. Banknotes, again, this usually causes people a little bit of issue. So as normal, the first two here are to do with changing the company's account, company's bank account. So a check for 970 issued to a supplier, so I'm paying a creditor 970 euro, have been entered in as 790. So I'm going to look at my creditors here. So 74,300 is my balance in creditors. What I had done is I had sent a check for 970, which should have reduced the amount the debtors or the creditors are owed. But I actually took that figure as 790. That was a mistake. So I need to add the 790 back. So I'm adding the 790 back to bring it up to the original debt, and then I'm taking away the correct check of 970. Again, the opposite actually done in the bank here. My balance here is an overdraft of 32,500. I had previously put through 790 as a check that I had sent, so I had reduced my bank, further adding to the overdraft, and now I need to cancel that. So I'm essentially putting that 790 back into the accounts, only to take away the correct check for 970 because we spent a check sending money to creditors. So that's how we deal with that. Second note here again is the same thing. We're looking at credit transfer of 2,400, this time by a debtor. This represents a first and final payment of 30 cents in the euro. So 2,400 is going to be worth 30%. The full amount is worth, I don't see where I've done it out here, but I'm 2,400 divided by 3 is 800, multiplied by 100 is 8,000. So the full 100%, sorry, is 8,000. That is coming out of debtors because they don't owe us any more money anymore. I'm cancelling the full debt. So the full 8,000, the full 100% has to come out of debtors. I've received the 2,400, so I'm going to add that to my bank. So my bank is already at an overdraft. This is positive 2,400. I've received that. The difference being 5,600 is now going to be a bad debt. So the full 8,000 comes out of debtors because I'm cancelling the debt. 2,400 is positive adding to bank. 5,600 is the selling distribution expense for bad debt. The banknote. So finishing off my bank here, I have 30,280 overdraft. And if I look at my bank statement, we were given a balance of 26,480. Again, it was an overdraft. A check was which has been issued to a director has not been presented, so I've sent a check to a director. Again, further adding to the overdraft, minus 3,800. I end up with minus 30,280 in both accounts. This doesn't go anywhere, but the two of them match. This is a current liability. That's my bank finished with. The last thing I'm going to look at here, this last note, I mean, this is the provision for bad debt. This is the billings. Provide for investment income, debenture interest. We've seen this, but it's this one here that we haven't seen for company. We've seen it for publish, but not for company. In this one, there is dividends. So there's preference dividends due must be paid. So the second we see that here, we look at the top of the question, and we see that there is 6% preference shares. So there has been 200,000 shares issued, and they are due a dividend of 6%. Whether we paid that or not, the total amount of preference shares that we will be, I suppose, accounted for to pay for this year is going to be 6% here, which is going to be 12,000. So I'm going to scroll down, I think, where did I put it? Yeah. So my full issued preference shares of 200,000 at 6% gives me what I owe to my preference shareholders for the entire year, which is going to be 6,000. The final dividend on ordinary shares, sorry, I'm missing a point here. It's the dividends paid already. So the dividends that have previously been paid here, where am I in the question? Yeah, interim dividends for the first 6 months, okay. So the interim dividends for the first 6 months was 54,000. I paid 6 months of dividends. I know that my total dividends for my preference shares is going to total up to 12,000, 200,000 by 6%. So if it's 12,000 for the year, and I paid 6 months of it, I paid half of it. So I paid 6,000 to preference shares. So this will be shown here. I'll go through it a little bit because it is a little bit difficult, just me kind of saying it off the top of my head, compared to, I suppose, doing this out in a normal class situation. But we have seen this before and published. The total preference shares is 200,000 by 6% for the year. But we know we've paid 6 months of it already. This has been paid at 6,000, and therefore the other 6 months is due. I know that I've paid dividends for first 6 months already at 54,000. I know that half of the preference shares has been paid 6,000. Therefore, the remaining 54,000 minus 6,000 will tell me how much ordinary shares I paid, which is 48,000. So again, I've got half of my preference dividends for 6 months that I paid. The other 6 months is remaining, because that's half of my total preference dividends for each one here between paid and due. The remaining amount here that I've paid minus the preference paid, which I already know to be 6,000, is the 48,000 ordinary paid. Now, the second part of this is going to tell us that a final dividend in ordinary shares be provided, bringing the total dividend up to 10 cents per share. So I know that my total dividend for ordinary shares need to come up at 10 cents per share. I can see that there is 760,000 ordinary shares. If I'm paying that at 10 cents, therefore 10% of that is 76,000, which means the ordinary shareholders should receive 76,000 this year. They've already received 48,000, therefore they're due 28,000, which hasn't been paid yet, which is due. So just to go through this again, because to be honest, I was jumping here and there in my first explanation of this. The preference dividend is the first one. It's always easiest to look at. We have 6% preference shares, and we know that the total issued preference shares is 200,000. 6% by 200,000 is 12,000. That's for the entire year. I've already paid 6 months interest, or 6 months dividends. Obviously half of the dividends have been paid for preference. So the 12,000 is for 12 months. If I paid 6,000 6 months already, which means I paid 6,000, half of the entire year. Therefore the remaining 6,000 is dividends due for preference. My ordinary shares, how do I calculate that? Well, I don't have any information on it other than the fact that I've already paid 54,000 of dividends. I know 6,000 of that had to be for preference, therefore the remaining has to be ordinary, 48,000. In this question we're told that the ordinary shareholders are to be paid at the end, bringing the total up to 10 cents per share. 760,000 shares issued, which means 760,000 by 10 cents, 76,000. I've already paid 48,000, therefore I'm yet to pay 28,000 here for ordinary shareholders. This is the end of the notes, because I'm not going to go through the other ones. You can look through them there compared to your own question. But I do want to show you how this gets dealt with in the P&L. So as of normal, we have our normal start to the question. We have our admin expenses. Rent is here, 14,800. Just make sure to look out for these things here. We also have directors' fees there as well of 32,000. Directors' fees, if you can remember from published accounts, is a admin expense. Generally, it's easier to learn after selling distribution expenses. Everything else is admin. So just make sure to look through the question to find any other outstanding expenses for the year. Okay, the normal P&L follows the same sequence. I have my profit on sale of land and my discount. Now I have my reduction in provision for bad debts as it's gone down. That's an income, so reducing provision for bad debt. There are my normal income figures, my operating income. I then have my non-operating income and expenses, which are investment income followed by debenture interest in that order. Add investment income because it's income. Take away debenture interest because it's an expense. I finish with my net profit for the year before taxation. Normally it would say less dividends paid, which would be here, but the figures have to be broken down because there's 4 sections and I basically just show them individually. Please show them individually. There's not 8 marks going for this figure. There's 2 marks going for each of these. So you show each of them separately. Done them out in the notes. Show them separately, and that's your final total for dividends. There's no transferring to capital reserve. So the next thing is retain profit. My profit and loss, which was a debit figure from last year, from the trial balance, so it's an expense, and that's my final P&L figure. Balance sheet, as of normal. Tangible comes after intangible, so this is the pre-2012. You won't get full marks if you do this in the exam. Intangible comes first, then tangible, then fixed assets, It's my normal stock, investment income due, debtors minus provision for bad debt, and the 50,000 the insurance company owes me. Here, I have my creditors, debenture interest, and my bank overdraft, but I also have what dividends I have due. 6,000 preference, 28,000 ordinary. So the dividends due have to go in as a expenses or as a short-term liability as well. Debentures, ordinary shares, preference shares, authorized issues, same as normal. Profit and loss balance, there's no evaluation reserve, there's no capital reserve. I'm just finishing here with my final balance to balance both sides. So this is the Dawn 2012 question.